This week has been intense, both geopolitically and economically. In the Middle East, Hezbollah leader Hassan Nasrallah was assassinated, followed by Israel launching a ground invasion into Lebanon. Just days later, Iran retaliated by firing nearly 200 ballistic missiles at Israel. The US, UK, and other global powers have been pushing for de escalation, but we're seeing tensions rise to levels we haven't seen in years. With the region on the brink of all out war, it's crucial to understand how these events are impacting markets around the world. At the same time, the US economy continues to show signs of strength. Inflation is closing in on the Federal Reserve's 2% target, employment is solid, and GDP growth is hitting 3%. With the Fed cutting rates to 0.5%, we've seen a resurgence in the markets. But will this positive momentum continue, or could the geopolitical risks trigger a pullback? Let's dive into the details. Let's start off with some day trades. Since August 19th, we've accumulated over 2,300 in profit in our day trades, maintaining a 96% win rate. Our strategy is built around consistent, reliable setups, focusing on small but steady wins. We typically trade 3 NDX contracts or 12 SPX contracts per entry, which allows us to capitalize on these moves effectively. On Friday, for example, we executed a short trade on NDX. Price hit our first entry point, quickly reversed, and we locked in profit across our targets. Scalp profit, target 1 and target 2, securing $345 on that trade alone. This approach isn't about chasing big, risky plays, but about consistently capturing well-defined moves and letting the strategy work. Now let's look at the US broad market. Friday was a bullish day for SPY as we retested previous all-time highs this week, which we had forecast on our post on Twitter last Friday. The pullback in SPY and SPX has been mild, with the market correcting in time rather than in price. This consolidation is usually a positive signal. Technically, we're above support at 564 with a bullish candle. The RSI is not yet overbought, so there's room to move higher. The PPO is showing bearish separation for now, but we're watching closely for a potential bullish crossover, which could drive further upside next week. The VIX chart also indicates a potential drop in volatility. We're seeing a peak in the PPO and RSI, which typically signals a decrease in volatility, and if volatility declines, it could continue to support a continuation of the bullish run. On the hourly charts, SPX remains above the weekly moving average and the PPO is in clear bullish territory. The RSI is nearing overbought conditions, but in short time frames, these can persist during strong bullish trends. Let's move on to the tech sector, which has been a bit of a different story. QQQ saw a shallower pullback compared to SPY, and that's largely because tech hasn't fully recovered from the September drop. But the good news is Friday's price action showed strength. We nearly had a bearish PPO crossover, but price has bounced just in time. This could mean we'll avoid that bearish signal entirely with another leg up on the cards. Right now, the RSI is sitting around 60, so there's plenty of room for more upside before we hit overbought conditions. We're also above all key moving averages, the 100-day, the 200-day, and short-term averages. Support is holding at 486, which is a key level to watch in the coming sessions. The NDX futures chart is very similar. The PPO didn't quite make that bearish cross, and the RSI is curling back up, signaling more potential room to run before we hit resistance. On the hourly, NDX is looking strong, sitting above the weekly moving average with RSI at 60 and PPO in solid bullish territory. The tech sector is holding up quite well, and if these signals continue to play out, we could see more strength in the near term. Small caps, as represented by IWM, tend to reflect the broader US economy, and this week's positive news on inflation and jobs data is a key factor. The September jobs report showed strong hiring growth, supporting the argument for a soft landing. This is a positive signal for small caps, especially if the Fed continues to ease interest rates as the market expects. On the hourly, the Russell found resistance at 2218 on Friday, and if we break above that 2,220 level, we could see that hold as new support. Commodities have been a key focus this week, with gold continuing its bullish run. We've been consolidating above previous all-time highs, which is a very strong signal. RSI is coming off overbought levels, and while the PPO has turned bearish, the geopolitical risks in the Middle East could spark a wave of new buying as investors seek safe haven assets. Although the technicals are calling for a pullback, fundamentals may override that, especially with the ongoing geopolitical uncertainty. Silver is approaching resistance around 32.81, but it's not as overbought as gold. The PPO looks like it's turning bearish here as well, but as we've seen, technical analysis can sometimes take a backseat to geopolitical events. Crude oil has had a strong bullish run driven by the conflict in the Middle East. We're now approaching resistance at 75, which lines up with the 100-day and 200-day moving averages. RSI is around 60, giving us room for more upside, and the PPO has wide bullish separation. Depending on how the geopolitical situation evolves, especially with the possibility of Israel striking Iran's oil refineries, we could see further upside in crude. Bitcoin is still in a consolidation phase, hovering around its key moving average. RSI is neutral around 50 and the PPO is bearish, but as we know, these indicators don't hold as much weight during sideways markets like the one we're seeing in Bitcoin. Moving over to Europe. The FTSE is holding steady above its 100-day and 200-day moving averages, but price action has been relatively flat since May. The RSI is turning bullish around 50, which could indicate a push higher, but there's no major momentum shift yet. For the CAC 40, we hit our 7,700 target, and prices reverse from there, retesting the 7,600 level from below, which coincides with the 200-day moving average. The RSI is sitting at 50 and the PPO is still in bearish territory, mirroring some of the US indices. And finally, the DAX. The DAX looks more bullish. We retested previous all-time highs this week and bounced strongly off that level on Friday. The PPO and RSI are both pointing up and there's room to move higher before we hit overbought conditions. Now on to our swing trades. Albemarle had a bullish run on Friday with price breaking above the 100-day moving average and heading into resistance at 103.50. We're now approaching a downtrend line and the 200-day moving average. RSI is nearing overbought levels and the PPO shows wide bullish separation. Traders should consider taking partial profits here and raising their stops given the upcoming resistance levels. On the other hand, we've got Micron, which has pulled back slightly after the recent earnings report caused a price spike. We're currently holding above 99.80 with bullish PPO separation and RSI around 60. We expect the bullish run to continue, looking for a break back above that 100-day moving average and a test of the 200-day, which rejected the previous price movement. This is another key level to watch over the coming weeks. And that wraps up this week's market update. With all the geopolitical and economic factors in play, it's important to stay informed and watch those key levels closely. Thanks for watching and happy trading.